Hello, my name is Paul Vosper. I am the president and CEO of Juicebar. We are an electric vehicle charging manufacturing company based in the US. By way of background, I spent 25 years in the real estate industry, including 14 years at Morgan Stanley, where I built, grew, and led a number of real estate investment strategies. Importantly, the real estate industry is our single largest customer vertical. When my partner and I were looking to buy Juicebar back in 2018, we saw three things. First, we're at the very early stages of a massive infrastructure investment need. Secondly, our competitors are not ready for mass adoption. Hardware quality and reliability is poor. User experience is difficult. Customer service is even worse. And in many cases, you're locked in as a customer to a proprietary network and to long-term contracts. The third thing that we saw is that the largest addressable market is really the fleet market and the level 2 market, the market where people charge while doing something else, typically sleeping, working, shopping, going to the gym. When we bought Juicebar back in 2018, we felt we needed to do two things as a priority. First was to invest in the technology. We developed the Gen 3 charger after recruiting a senior Tesla infrastructure executive. We gave him a clean sheet of paper to go and design and manufacture a state-of-the-art EV charging unit that is fast, safe, and cost competitive, both on an upfront basis and on an ongoing basis. We also developed a sophisticated technology solution that allows for users to use the chargers more easily and for our customers to manage a portfolio of chargers more efficiently and more effectively. The second thing that we needed to do was to expand the team. We recruited an experienced sales team from one of our competitors. We brought in a highly experienced customer service head. As I mentioned, we also brought in a chief product officer from Tesla, as well as a very experienced marketing director. So the core team is in place, but we're not finished yet. We are looking to add resources, particularly in the engineering, customer service, and sales areas. And we expect to triple headcount across the course of the next 12 months. As a result of the launch of the Gen 3 charger, our third generation product, we have seen a very strong customer validation, winning contracts versus our competitors with some of the country's largest owners of property and companies, including a 500 unit order this month from one of the nation's automakers. We are a capital light business. We sell and lease chargers to site hosts. We generate recurring revenues from monthly charger network fees and charger management and maintenance contracts. We're also a post-revenue company. So we're expecting to generate around $5 million in gross revenues this year, which will leave us in a neutral EBITDA position. And we're projecting $25 million next year, unique in the industry. That should lead to a positive EBITDA of about 3.2 million. There is a significant interest from investors in the space. For example, Blink Charging, which is the only the only publicly listed company listed on NASDAQ, has a market cap of around $1 billion from TTM revenues similar to ours of about 4.3 million and a loss of 11.5 million. ChargePoint, our largest competitor, generated revenues of $143 million last year, but at a loss of $133 million. That company just announced a SPAC merger at a pre-money valuation of $2.4 billion. We are looking to raise a Series A investment primarily to expand our product development and product leadership. We're expecting to scale up manufacturing and reduce COGS by 30%. We're continuing to invest in technology, especially technology that allows us to integrate into other systems, such as building and energy management systems and fleet management systems. We're also expanding selectively internationally. We're already in Canada. We put our first installation in Mexico in this month, and we're finalizing an agreement with a UK-based real estate company. We are looking to expand our revenue streams, the recurring revenue streams. So we've already focused on the network and maintenance contracts. We also see a lot of opportunities in the energy efficiency market. We entered into a joint venture with Ameresco this year. But we also see opportunities in the carbon credit market, power resales, and advertising. So thank you very much for your patience and your time, and I look forward to following up with you.
Hi, Paul. Thanks very much. Question from David McGrath. Are you doing anything in EU or the UK?
Yeah, so we, as I mentioned at the back end of the presentation, we're signing an agreement with one of the UK's largest real estate companies to do a joint venture to launch charging in the UK. We've had discussions in places such as Germany and Austria as well. And then the other main area that we're seeing interest is in the Asian markets.
Great. And from Adve Maniar, how's your business model different, less or more scalable than your competitor ChargePoint?
Well, I think the main difference is we see ourselves primarily as an infrastructure company that uses our hardware to host technology. ChargePoint sees themselves as a technology company and hardware as an afterthought, which has resulted in their hardware is now probably 4 or 5 years old, is quite ancient in EV terms. They use a locked-in proprietary system. So when you buy their charger, if you're unhappy with ChargePoint or the service they provide, your only choice is to rip out the hardware and start again. And we are using the European open protocol system, which allows us to host any network on our charger. So a customer, to the extent they're dissatisfied with us, are able to change networks without having to lose the hardware. That has been, it's a very sticky business. It's sort of like changing your bank account. It's not, it's easy in theory, difficult in practice. But when we go in front of a customer, particularly a Class A building owner, the thought of locking themselves into a 5-year contract with ChargePoint versus an open protocol system like ours wins the day. And it's the prevailing system in Europe. There are very few proprietary systems in the European market.
Excellent. Well, thanks very much, Paul. Much appreciated.